This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Stocks began the second quarter with a pullback as investors worried about higher interest rates and geopolitical risk. The S&P 500 started April by falling almost 1%. It was the biggest weekly drop since the beginning of the year. More than two-thirds of the index's members lost value, along with 9 of the 11 major sectors. The Institute for Supply Management's Manufacturing Index unexpectedly rose above 50, signaling expansion for the first time since September 2022. Strong orders, production and hiring fueled the move. ADP's private sector payrolls report and the government's non-farm payrolls report both exceeded forecasts. The 10-year Treasury yield rose to its highest level since November in response. Federal Reserve Chair Jerome Powell said he needs greater confidence that inflation is nearing 2% before cutting rates. He'll get a key piece of data this Wednesday when the government issues the Consumer Price Index, or CPI, for March. Fed Governor Michelle Bowman also floated the idea of another rate increase, not a cut unless prices come down. Investors additionally worried about the Middle East after Iran's embassy in Damascus was bombed and Gaza aid workers were killed. Those events helped push crude oil futures to their highest level since October. Another story last week was surprising strength in China after the Caixin Manufacturing Index rose to a 13-month high. That also boosted demand for commodities like oil and copper. Energy stocks were the biggest gainers last week and are now the top-performing sector this year. Gold and silver miners also rallied. While those metals tend to benefit from lower interest rates, last week they followed momentum from early March. Gold hit a new record and silver reached its highest level in 34 months. Communications was the only other positive sector, boosted by Meta Platforms and Netflix. Meta jumped on positive notes from Jefferies and Wedbush, which see further gains in advertising and artificial intelligence. Netflix is expected to benefit from price increases and subscriber growth, according to Pivotal Research. Oil refinery Marathon Petroleum jumped as gasoline inventories shrank and Ukraine attacked more facilities in Russia. Retailers, solar energy, and biotechnology led to the downside last week. Lamb Weston had its biggest weekly drop since the pandemic after a change in its enterprise resource planning system hurt its ability to fill orders. The food company cut guidance but said operations have returned to normal. Ulta Beauty plunged after warning of soft demand for cosmetics. Walgreen Boots Alliance dropped to its lowest price in almost 25 years as it struggles with high costs and a heavy debt load. Last week also featured big news on 2 major companies. General Electric, which pioneered the spread of electricity in the late 19th century and grew into a sprawling conglomerate in the late 20th century, completed a historic breakup. The original company will now focus on jet engines and avionics. It changed its name to GE Aerospace. The electric generation businesses like turbines was spun off as GE Vernova. Another part of the old company, GE Healthcare Technologies, became independent in December 2022. Tesla, named after the scientist who outsmarted Thomas Edison and GE in the 1890s, reported an 8.5% drop in quarterly deliveries. It was the company's biggest miss ever, according to Bespoke Research. Tesla remains the worst performer in the S&P 500 this year, according to TradeStation data. And now let's chart the market. Last week was relatively bearish for the S&P 500 compared with its trend since early November. The index peaked early in the week and slid through Thursday. It broke its 21-day exponential moving average for the first time since January 4th, but rebounded on Friday. Oscillators like Rate of Change and Wilder's Relative Strength Index, or RSI, fell to their lowest readings since early November, which are potential signs of slowing momentum. Still, the index remained above a weekly low from March 19th. It follows a recent pattern of tight pullbacks. Such price action may suggest there are few sellers. The sideways movement potentially reveals uncertainty as investors consider catalysts like earnings and interest rates. Is the index stalling? Or is it consolidating before another move higher? Events like Wednesday's inflation report and the approach of quarterly results in the next few weeks could answer that question. We'll now consider the agenda this week, which begins quietly and builds toward big events on Wednesday, Thursday, and Friday. Nothing important is scheduled for today or tomorrow. Wednesday morning brings CPI at 8:30 in the morning, Eastern Time. Traders will view it as an important indicator for inflation and interest rates. Delta Airlines also reports earnings before the opening bell. At least two other important events occur during the session. The Energy Department reports crude oil inventories at 10:30 and the Fed releases minutes from its last meeting at 2 o'clock in the afternoon. Both could impact trading. Thursday features the Producer Price Index, another inflation gauge, and initial jobless claims. Friday brings consumer sentiment. It's also the first big day of earnings season as major banks like J.P. Morgan Chase, Citi and Wells Fargo issue results. Thanks for watching. Please visit tradestation.com for more.